Hello day traders, as usual we start the day with a recap of the Asian session. Currently countries are coping with a more or less similar economic issues. They are trying to get the manufacturing industry back on track and normalize the labor market. Apart from that, central banks are revising their monetary policy stance to cap inflation. Naturally, national currencies are quite vulnerable to such changes. Let's discuss what happened in the Asian session today. The US dollar as the main reserve currency has a huge impact on the trajectories of other currencies. At the same time, the Wall Street dynamic also influences Asian stock markets. The US equity market has been declining for the second day in a row. The sell-off was triggered by the FOMC meeting minutes. Given that inflation has hit the highest level in 4 decades, the likelihood of a rate hike by 50 basis points is quite high. The Fed also signaled it would reduce its massive bond holdings at a rapid pace of $95 billion. The Fed agreed to trim its balance sheet by monthly caps of about $50 billion in 2017-2019. However, the situation has drastically changed since then. The US dollar is enjoying a dazzling rally amid the hawkish rhetoric of the central bank. It has already reached the highs of May 2020, and yesterday it approached a high of 99.77 versus its main rivals. Some analysts expect a stellar rise of the US currency above 100 points. They advise traders to hold long positions. Perhaps the predictions will become more real during the American session. There are plenty of factors now for the greenback's bull run. For finance rising US treasuries, the Fed's aggressive stance on monetary policy, its safe haven status, geopolitical wars, and the euro's fall to a 2-year low. And these drivers are sure to support its further growth. However, in the Asian session, the US dollar showed slowed a little bit. At the time of making this video review, the US dollar index was trading at 99.66. Perhaps the risk appetite has decreased somewhat, as Western states have prepared new sanctions against Russia. And now the US dollar is consolidating in the range of 99.40 and 99.70. Unlike other current countries, Japan is dealing with entirely different problems. Some FX strategists even call the yen an antipode currency. The country does not try to curb inflation. Excluding high energy prices, inflation in Japan is rather low. Apart from that, the Bank of Japan maintains an ultra-loose monetary policy, and this is why the rate gap with the US is growing. To avoid a rate hike, the Bank of Japan decided to purchase an unlimited amount of 10-year government bonds. The regulator has more than once adhered to such an approach. The yen remains weak against almost all currencies. It's also no rival to a strong US dollar, and the latter adds gains almost every day. At the time of making this video, the dollar-yen pair was trading at 123.63, and during the Asian session it was consolidating within the range of 123.44 and 123.93. What is happening now with the Aussie and the Australian economy? Is the Australian dollar still an antipode currency? More no than yes. The economic situation in Australia is similar to one in the United States. The economy and the labor market are recovering buoyantly. Inflation is high in both countries, so the central banks are forced to take a hawkish stance. And yet the Reserve Bank of Australia has postponed a rate hike till June amid the upcoming federal election. Apart from that, there are other fundamental factors that are bearish for the Aussie. The main ones are dropping commodity prices and the unstable oil market. In addition, traders were disappointed by Australia's trade balance report published yesterday. Imports volumes significantly exceeded expectations, while exports in February sank to negative figures. Strong exports has a positive impact on the Aussie, so the trade balance report for February turned out to be rather negative for the Australian dollar. In the Asian session, the AUD-USD pair dropped below the 0.7500 level. It reached a low near 0.7475. At the time of preparing material for this video, the pair was trading at 0.7476. It's moving downwards, fluctuating between the support level of 0.7470 and the resistance level of 0.7522. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. Feel free to leave your feedback, and thanks for watching. See you soon.